Hello guys, and welcome back to another video. Now, a 9 to 5, we've all had one, and especially when we've been starting out in trading, it can be super difficult to juggle a 9 to 5 job and the stresses that come with that and the logistics that come with that, whilst also trying to develop as a trader, learn trading, develop your craft, finding your edge, doing all those countless hours of back testing. So this video today is going to be a super comprehensive guide on what to focus on, what I personally did back in my infancy stages in those first few years, and how I juggled both job and trading, and then how I eventually transitioned away from a 9 to 5 job into a fully, consistently profitable trader. There's so much noise out there. There's so much BS out there. Use this guide today as your trustworthy, straight to the point guide that's going to really give you some good clarity, some good direction on what to focus on, what to double down on to help you go through that same struggle that inevitably everybody goes through at the start, and how to navigate it best. So let's grab a pen and paper and let's get cracking. So guys, point number one, and I have to start with this, is double down on swing trading. You know, if you're a UK-based trader like I am, and I was obviously in my infancy stages as well, I miss the bulk of the London session. I miss the bulk of the New York session as well. If I'm working a typical sort of 9 to 5 or 8 till 4 or 9 till 6, that typical shift pattern, I'm missing the two biggest volatile sessions each day. So my bias, and it worked for me, and it's transitioned really well over the years, but it's double down on swing trading instead. There's so much noise out there. There's so much BS, especially on social media, that pushes much more of a scalping route and getting in and out of trades and taking 5 trades a day, 10 trades a day. It's complete nonsense and garbage. And the sooner you move away from that approach, you will start seeing such better results. Double down on quality over quantity of trading, and swing trading, that style completely answers that. Quality over quantity. It then means you can take a position, for example, on Tuesday morning, because price is around your area of interest. You've been able to look at your phone, so look at your laptop still and see that, and looking for does price meet your entry criteria? Is entry criteria forming? Is this a trade you're going to execute on? Let's say it is, right? Then you might be holding that trade then, if you're swing trading, till Thursday, till Friday, into the next week as well. But the point being, it doesn't then matter about what's going on in the lower timeframes. You can still get on with your job and you can still focus on your work. So obviously you're still getting a good income each month. But at the same time, then it's much more hands-off because you're swing trading. You don't need to be on the charts, and you don't need to be checking things. You don't need to be checking every hourly candle or 15-minute candle as all these people online preach. No, you're probably looking at the charts maybe every 4 hours, because you're looking at seeing what that 4-hour candle's close like. That's what's so much more better and gives you an advantage, takes the emotion out of trading, makes it focus on a lot more optimal setups, and then it allows you to still go about your day, because all the noise on the lower time frames doesn't really matter too much. And then it allows you during the day at work just to check here and there, yep, manage my trade, bring stop loss to break even or just past break even, or it's such a less hassle, less stressful way of managing your trading, especially in those first few years. Like I said, when you are juggling a 9 to 5. 9 to 5s, they come with commitments, they come with stresses themselves. And if you're on the market trying to look at scalping and intraday trading, trying to take, like I said, 2, 3, 4, 5, 6, 7, 8 trades a day, that's a very stressful environment. That's a lot of decisions to make as well. It's a lot of decisions to try and get right. And if you're then juggling work and you're in an office or whatever it may be, the mindset's not there. The headspace isn't there. You're not ultra focused. You're not ultra disciplined. It's highly likely you're going to make multiple mistakes. It's not worth it, I promise you. I am biased. I am a swing trader myself. But if you can nail swing trading, then transitioning to day trading is so much easier, not the other way around. So double down on swing trading. That would be my advice anyway, even if you didn't have a job. But swing trading is a much better style of trading in general. It's higher quality over quantity, much more probable setups. Conferences are much more respected. It's a much less much less stressful way of trading. And it works so well for people in those first 2, 3, 4, even 5, 6 years, depending on how long your journey is to profitability. So that would be my first tip. Number 2 has to be about preparation. So Friday night for me, this is what worked for me. This is what I still do to this day, even though I don't have a 9 to 5. Friday night, after market close. So for us UK traders, that's obviously 10 p.m. So I look at daily closes, weekly closes. Obviously, if it's the end of the month, we'll look at monthly closes as well. Then go about your weekend as usual, get the headspace elsewhere, and then come back to Sunday night before, pre-market open, and again, go through analysis again. So and obviously you should only have a set few number of pairs, or your watch list should only be a set number of pairs. So there shouldn't be too much to juggle anyway. So the point being with preparation is, for a fact if someone asks you, what are you looking for in that setup or that pair this week? You're thinking, right, I'm looking for X, Y, Z because price is currently here. You should be able to reel that off really, really well. You should know each pair like the back of your hand. And again, this is why I prioritize quality over quantity. Doesn't just mean in terms of the number of trades you take, but it also means about the number of pairs on your watch list. Okay, so you can, again, ultra focus, ultra discipline, because you have that other commitment of a job. So you should be well aware of every single potential setup for the week ahead. So again, and it's all marked up. And so again, when you're then at work, and let's say you're on a lunch break, your analysis is already there. You have alerts already set, not orders, never set buy orders, never set sell orders, because you need to look for price to show you signs of entry confirmation. That's for another video in terms of entries. But set your oh my goodness, I forgot now. I've lost where I was. That's it. Set your sort of notifications, set your triggers and alerts, and then you can look at price live at the time, and then does it meet my entry criteria? And then you can spend a bit of chart time and a bit of focus there and then, because price is around your area of interest and it's worth looking at. But the rest of the time, you could be waiting and sitting on your hands for hours and even days, and that's fine, because again, you're more swing trading. So get prepared at the weekend, even when the market's shut. Do all of it then when there's no markets going on, there's no noise at all on any time frames. Really double down on those 2, 3, 4 pairs maximum and the corresponding indexes, because then when it comes to managing that busy work week with your job, you already have everything systemized. You know where everything is, you know where that potential area of interest is, you know what you're going to be looking for, you know what's going on the weekly, daily, and 4 hour. Get really prepared, okay? Because you're not going to have the luxury during the day at work to do analysis or to check X, Y, Z. Get really nailed at the weekends. Put that time aside ultimately. You have to make a sacrifice of other things, okay? If you really want to make this work, get prepared and organized. Now, of course, guys, if you're unsure as where to start where it comes to transitioning over to swing trading, then check the link out in the bio. I've documented my whole strategy in complete detail of what I use to this day and what I've developed over the last 10 plus years and back tested for tens and tens of more. Links in the bio if you're interested. Now, how do we transition then into consistently full-time trader from our 9 to 5? So you should be generating a consistent monthly income from your job. So that covers all your expenses. It covers life basically. Now, with anything excess and anything left over, this is where you want to start funneling it into your live account, okay? You should always be trading live, obviously with money you can afford to lose, because it teaches the psychological aspect. It makes you double down on your risk management a lot sooner than people tell you. Risk management, as you know, if you've watched any of my other videos, it's the most important thing. But anyway, that's for another day. But that disposable income that's left after your expenses and all that monthly income, put that into that live trading account, or put a small amount in so you can continue compounding it. Small wins, quality wins, as always, quality over quantity. Then, in terms of a longer term period, that's when you now, in this day and age, hence why I'll speak about this on this video, that's then where you start pouring that capital and those profits into funded accounts. Now, I am biased. I'm not affiliated with them, but I just think they're the only reputable, well, they're one of 2 reputable companies. Go with FTMO. They might have slightly pricier challenges, but hugely reputable, fantastic company, been around a very, very long time, not unlike a load of other dodgy prop firms out there. So that's when you start funneling that capital then into funded accounts. Now, I'm pretty sure these days you can get a 50K, 100K account for anything between $300 and $400. So it's pretty damn affordable, especially if you're working a consistent income and a consistent 9 to 5. You then simply adopt that same risk management, that same edge that you should have developed by now, And that's the thing. You don't go into these prop firm accounts until you can prove to yourself that you have grown. It doesn't matter if it's a small amount, a big amount, but you have grown capital effectively, consistently, month after month, at least 6 months, that you can grow it effectively, you can stay super strict with risk management that whole time, and that you can manage that amount of capital, because then that transitioning over to those funded accounts is so much smoother and so much easier. There's a crazy stats out there about how many people fail challenges until they eventually pass and then eventually get a payout. It's tiny, tiny, tiny percentages. You want to fall into that tiny bracket, okay? And I know you'll be good enough to, but you just need to make sure you have your edge first and you've proven to yourself that you can trade whatever amount of money consistently. As you then secure your first funded account, you'll naturally generate payouts. Those payouts, again, should be kicked back into some personal capital. But at this type of stage where you're still growing and still with your 9-to-5 job, the more accounts you can get in terms of funded accounts or scaling that funded account, you're then starting to pile up some capital, some cash with regular payouts, popping them aside, and to the point where you've grown that personal capital so much, you can then, it's enough to go off on, it's enough to start trading yourself. Now, my advice would be here, if you get to this stage where you have a load of personal capital now, you've obviously taken advantage of prop firms and you've had regular, healthy looking payouts, this is then when you drop down to potentially part-time. You don't quit, but you go down to part-time. So your then part-time salary might still just cover, say, expenses, but you might not have much disposable income left. But that is why then you have your part-time income for expenses, so you are still risk-free in terms of life, okay? So there's no downside if, for whatever reason, you suddenly go 180 on all your trading and you lose everything, but that shouldn't and won't happen anyway if you're disciplined and you have got this far. But anyway, you get the picture. The part-time job still covers the expenses, so you're pretty risk-free. You've then still got your funded accounts that you're taking regular payouts from, but then you've also built up that healthy chunk of capital. So then this way you have 3 streams of income coming in. It allows you to continue building your personal capital without withdrawing from it for life day-to-day expenses. And then so that way you can continue building your personal account and stacking your capital, but still obviously injecting more capital because you're pulling it from the funded account still. And you just then need to continue this process, stay disciplined. Yes, there's going to be times where it's a bit up and down, but you get the picture. And if you can do this for long enough over time and build enough capital up, then this is when you can eventually make the leap. Okay, so then again, you have your personal capital still. It's even healthier by now, but you still keep your funded accounts. So again, you still have income being made on your personal account, income being made from the prop firms. So again, you're reducing your risk. Obviously, I would advise this to anyone, but keep your expenses low, of course. So again, you can maximize as much money and payouts into your personal capital to grow things quicker, to compound things quicker. Because eventually, at the end of the day, if you're making 2%, 3% on a trade, which is fantastic, if you're making that on 250K, as you know, that's much more life-changing than obviously making it on 20K. So yes, it takes time. I'm not sugarcoating this. It's a very long process. It's a very arduous process. But again, if you put those systems in place, you've proven you have your edge, you've nailed your swing trading. Yes, there's lots of factors to it, but if you can do that and stay consistent and stay with risk management, then you're setting yourself up to give yourself the best chance possible of making it as a full-time trader without the need for any part-time work, any full-time work. And my God, will it be worth it? Trust me. So guys, I don't want to ramble on too much. I want to be as concise as possible. I hope that's helped. Again, as I said earlier, if you need any help in terms of developing that strategy, finding that edge, check the link in the bio. My strategy is there. I've helped so many people already. The feedback's been immense. I really do believe in this product. So, it's there for people that want it. And if you don't, that's also fair enough. But link is there if you want. Take care, guys, and I'll see you on the next one.